Hare Krishna. Welcome to Tax YouTube channel. This is Hero Pingai, practicing chartered accountant based in Mumbai. Also, partner in Motilal and Associates LLP, member for Marks Network. Welcome to the video series on concurrent audit of bank branches. And today is session 11, and we are going to discuss topic asset classification and IRAC norms. So let's dive into it. Let me allow to share my screen. Yes. So income recognition and asset classification, that is IRAC norms issued by RBI, form the core prudential framework for banks. So these norms ensure what that banks recognize income only when it is usually realizable and classify assets based on their recoverability. For auditors, IRAC is a high risk audit area, as incorrect classification directly impacts what profit overstatement, under provisioning, and misleading financial statements. So concurrent auditors must focus not only classification but also timeliness, accuracy, and consistency with RBI guidelines. So moving further, let's understand RBI IRAC norms overview. So RBI IRAC norms classify advances based on recovery behavior and not security or borrower strength. Okay, what RBI IRAC norms classify advances based on what recovery behavior and not on security or borrower strength. So key principles here: objective classification based on overdue status, borrower-wise classification, important audit point, uniform application across the banks. So asset categorized into standard asset, that is performing one, substandard assets, that is NPA less than equal to 12 months, doubtful NPA more than 12 months, and loss asset identified as uncollectible. So these are the categorization of asset. So auditors must verify correct classification date, system driven versus manual override, and compliance with RBI master directions. Moving further, let's see concept of SMA classification. So SMA classification acts as what an early stress detection mechanism before an account becomes NPA. So breakdown under this is SMA 0, SMA 1, SMA 2. SMA 0 stands for initial stress, SMA 1 moderate stress, and SMA 2 severe stress, and high audit focus needs to be there. So important for auditors here is SMA 2 accounts often become NPA soon. So it helps identify potential slippages, weak monitoring, and evergreening attempts. So audit procedures would focus on review SMA movement, trends, check corrective actions by the branch, and verify the reporting to the CRILC for large accounts. So moving further, let's see NPA identification, the core criteria. So NPA identification is strictly governed by 90 days delinquency norm. Important audit checks here: term loans, that is installment or interest overdue more than 90 days, cash credit or overdraft, no credit sufficient to cover the interest, account remains continuously overdrawn, and under bill purchase and discounted overdue more than 90 days. And under special category, agricultural loans, short duration crops, 2 crop seasons, and long duration crops, 1 crop season. So auditor must ensure here that no manual suppression of overdue. Very often we find that, and correct application of DPD logic and system integrity, that is CBS reports. So moving further, let's see out of order concept of CC and OD accounts. So out of order is one of the most litigated audit areas. Even if within limit, account becomes NPA if no meaningful operations, interest not serviced. So audit focus here should be verify drawing power versus outstanding, check stock statements validity, and identify the window dressing entries if any. Common manipulation, temporary credits before the audit, and routing of funds from other accounts. So auditors should use transaction scrutiny, last credit analysis, and peak balance review. Moving further, let's understand upgradation of accounts. Here, upgradation requires complete regularization, not partial payments. Very important. Upgradation requires complete regularization of the account and not partial payments. Key audit checks here, all overdue interest plus principal cleared, must be clear. No restructuring, camouflage, and genuine cash flow versus adjustment increase. So special caution here is accounts upgraded just before audit. Many times it happens. Funding through fresh limits, evergreening. So auditor must verify the sources of the funds and substantiability of the repayment. Let's understand degradation of the accounts. Asset degradation follows a time-based deterioration that is substandard up to 12 months, doubtful beyond 12 months, and loss identified by the auditor or RBI. So audit importance here, ensure what correct aging, verify NPA date, critical for provisioning, and check if accounts are stagnant but not downgraded. So common issues here, delayed NPA recognition and incorrect aging due to restructuring. Now let's understand income recognition norms. So income recognition is tightly linked with what? Asset classification. Key principles, standard assets, accrual basis, and NPS cash basis only. That till that we cannot recognize the income. So audit procedures will be verify interest reversal entries, check suspense interest accounts, and ensure no income booking on NPAs. So risk area will be profit inflation due to non-reversal of accrued interest and recognition of unrealized income. So let's understand provisioning linkage. Okay. So though provisioning is a separate, it is directly dependent on the correct classification. Audit implication is misclassification, under or over provisioning, and impacts on will be profit, capital adequacy. So auditor must recompute the provisioning, identify the shortfall, and report in long form audit report that is related to statutory audit of the bank branches. So next, moving further, let's understand common divergent cases. Here, as per the supervisory observations, RBI inspections, common divergences include what? Evergreening, very frequent. Fresh loan to repay the old loan. So DPD miscalculation also is there. The incorrect overdue tracking, stock statement issues, expired or obsolete statements ignored, and window dressing and temporary deposits before the audit. So improper restructuring also main of the issues, that is avoiding what? NPA classification. So auditors should apply professional skepticism here and review what transaction trails, identify round tripping, that is from internal to in the transfer from internal accounts to internal account of the customer. So moving further, let's understand what will be the audit approach. That is the practical steps we can say to it. So concurrent auditors should adopt a risk-based approach. High value accounts should be verified on a priority basis. SMA2 accounts, potential NPSO need to be tracked, and year-end scrutiny, that is window dressing risk. So audit tools will be CBS reports, exception reports from the CBS, and manual verification is necessary. Under documentation, working papers must clearly show basis of classification and deviations observed, whatever the areas. Then let's see what will be the key red flags for auditors. Red flags indicate what? Possible misclassification, circular funding patterns, group account adjustment, backdated entries. So auditor action will be here, escalate to a higher authority if you find anything, report in concurrent audit report 2, recommend the corrective classification. So we are moving towards the conclusion and takeaways part for the today. Asset classification under IRAC norms is not just a compliance exercise, but a reflection of the bank's financial health. For concurrent auditors, vigilance is a key. Focus on substance over the form, identify the early warning signals, and ultimately correct classification ensures what? True and fair view, adequate provisioning, stability of the banking system. As a banking operations grow complex, the role of the auditors becomes even more crucial here. So, continuous learning, adherence to RBI norms, and strong analytical review will ensure what effective concurrent audit outcome. So, members are encouraged to refer to the RBI Master's directions. ICA guidance note on audit of banks recently to 2026 is already issued by the ICA, and for all these necessary for deeper technical clarity and updates. So that's it for today. Thank you so much for patient hearing. If you have any questions, observations, suggestions, then do let me know via WhatsApp, email, and you can also comment below the video. Hope you are gaining valuable knowledge from all these updates and video series which we are conducting on a Tax YouTube channel. Thank you so much once again. If you are not yet subscribed to Tax YouTube channel, then do subscribe it for latest updates and video series like this. Thank you so much once again. Bye bye. Take care. See you soon. Hare Krishna.